The dividend issue was outrightly dismissed by markets as she was responding to the 14 issues shareholders raised, which included, amongst others, the disclosure of results and reports of the bank's subsidiaries to the remuneration paid for former Governor Tito Mboweni.
So firstly, on the question of dividends. Central banks worldwide are public entities that fulfill public interest roles. In practice, the pursuit of this role is not synonymous with the realization of profits. Similarly, the SARB is required to conduct its activities in the public interest only.
There were no policy shifts here despite difficult times. But the governor talked about how global problems have influenced the operations of the bank. The economic trends in the developed markets such as the US and the euro area proved to be a challenge in the past year.
The economic and political ramifications of fiscal austerity programs are of particular concern, not only because of their potential to derail the recovery in other regions, but also because of South Africa's close and significant trading relationship with Europe. It appears that growth in the US is likely to remain low for longer, as monetary policy actions attempt to combat the threat of deflation and persistently high unemployment. The global banking system has improved somewhat, but serious risks remain.
At the supervisory and regulatory level, the bank will look to international benchmarks, including the Basel Committee, the IMF, World Bank and G20 deliberations on regulatory reforms of the banking sector.
Reforms of the supervisory and regulatory environment of the banking sector have also received increased attention at the global level, and these developments will impact on the domestic banking system. The bank has also participated in the deliberations of the IMF, the World Bank, the G20, the Basel Committee on Banking Supervision, which is drafting amendments to the existing international convergence of capital measure and capital standards, the working groups of the Financial Stability Board at the Bank for International Settlements, and the regular bi-monthly meetings of central bank governors held at the BIS.
There was ambiguity in terms of what steps the bank will take regarding the increased capital inflows from developed countries. The bank saw advantages and disadvantages in the increased capital inflows from developed countries, despite strong accusations of a currency war from emerging economies like Brazil.
The past year has also seen a significant flow of capital to emerging economies, in the face of persistently low interest rates in advanced economies. The bank took advantage of these inflows to add to its foreign exchange reserves, which, although at historically high levels, are still relatively low compared to other emerging market countries. However, the need to sterilize the impact of these purchases of foreign exchange on domestic liquidity resulted in the bank reporting an after-tax loss of 1.05 billion during the financial year under consideration.
People who were at last year's function said there was less tension this year between the bank and shareholders. It appears that there is more unity around what was once a fractious relationship, and at the very least, that is a good omen for 2011.